Hey, thank you so much, Steve, for the introduction. Thank you, Scott, for putting this together, for the invitation, and thank you to each and every one of you for taking the time to be here with us this morning. I'm excited to share our vision with you. We're doing some pretty special things in the blockchain space. Now, before we get into nodes and the opportunity that's in front of us, I want to set the stage with something most people never really think about. So, what if I told you that there are more than 300 million companies in the world? Yet only about 40,000 of them will ever make it to the public markets. Think about that for a minute. So, out of hundreds of millions of businesses, only a tiny fraction will ever access the capital markets, be able to raise money publicly or tap into institutional capital. So, that means that less than 1/100th of 1% get through the door. If you think about it this way, if I asked you, what would you think of a system that 99.9% of the companies simply cannot access? What would you say about the system? System's broken, right? I mean, it's outdated. And that is how outdated the current financial infrastructure really is. We are running the global economy on rails that were built for an elite few. The remaining businesses are left navigating either slow banks, expensive loans, private equity, or friends and family. And it's an old world system that's designed for the privileged, not necessarily the innovators that are moving the world forward. So for the first time ever, we can create now open, transparent, regulated is the key word, digital capital markets that give everyday companies access to something that they've never had, which is a way to raise capital. A way to tokenize real world assets, which is a huge conversation right now in the media. Everybody's talking about it from BlackRock to Fidelity to JP Morgan.
Look, there's more to
Larry Fink, who is the CEO of BlackRock, recently was quoted as saying that tokenization of real world assets is like a freight train that can't be stopped. And we're at the very beginning of it. So, what that is a way to move value with more efficiency and fewer gatekeepers. And Trusted Smart Chain was built for this moment in time as it pertains to finance. Every single node operator in our community is helping power the infrastructure of our blockchain for a system that supports the other 99.9%. So, what I want to walk you through today is first of all, how it works, why it matters, and why it means for you an opportunity to be an early infrastructure partner with us. So, with that, let's go ahead and jump right in. I do have to start with a disclaimer. I'm a co-founder of a company called ProsperLink. We are a software sales company, and we hold the exclusive contract with the governing DAO for Trusted Smart Chain. Trusted Smart Chain is a fully decentralized blockchain. Nobody owns it. It is governed by a DAO and a legal charter. It's a 60-page charter. The DAO is run by its members. So a DAO is a decentralized autonomous organization. It's recognized by the government as an entity no different than an LLC or a sub-S corporation, except that it's more congruent with Web3, and which is the next version of the internet and blockchain. What we're doing is we're sharing information today about trust nodes, which are software licenses that support the operations of the Trusted Smart Chain blockchain. These nodes are not considered investments, they're software. And we don't make any guarantees from an ROI standpoint, from a profit standpoint. The communication that we're going to be talking about today shouldn't be construed as financial advice. So, with that, the reason why we built Trusted Smart Chain is very simple. We were looking to bridge the gap between high valued assets and tokenization. We were looking to provide a universally accepted framework, a regulatory compliant pathway forward for businesses to be able to raise capital utilizing blockchain. That has not existed up to this point. Blockchain, the way that it works at the very simple level, it's replacing the banks and these centralized institutions. A transaction is requested, a block is created, it is broadcast to all of the nodes in the network. Those nodes work synergistically together to validate those blocks. The block is added to the chain, the transaction gets verified and executed. So the blockchain is essentially providing a ledger and ultimately securing the network, allowing for that transaction to go to A to B in a safe and secure manner. Now, tokenization of real world assets. Why is this such a huge conversation? Why is this a massive paradigm shift in the financial system? Well, tokenization is using that same blockchain technology now to break down physical or digital assets into smaller tradable units, similar to stock, right? You go buy a certificate of stock, which gives you a right of ownership, a right of distribution in a company. In the same way, you now have access to digital tokens that are giving you ownership in high valued assets, except we're utilizing blockchain as opposed to the stock market. We're seeing everything from luxury hotels, existing businesses, commercial properties, a lot of real estate, oil and gas companies, just to name a few. To give you some perspective on the growth, 4 years ago, we saw about $2.6 billion come on chain that were tokenized. This year, 500 billion. But over the next 4 years, conservative estimates suggest that we could hit anywhere from conservatively 16 trillion upwards to $100 trillion in tokenization just in the next 4 years. The reason that we have to ask ourselves why. Why are we seeing this massive movement towards blockchain? Well, number one, 99.9% will never be able to access the capital markets. But number two, the cost to capital today to go public is very expensive. On average, it costs about $5 million. It's a very lengthy process. Let's say that you do make it through that process. You're one of the lucky ones and you make it to the stock market. Congratulations, because your dollar turns into 80 cents overnight. Why? Because of massive manipulation. Up to 80% of the shares that are sold through dark pools and naked shorting, which allow these institutions to be able to manipulate the stock in their favor. You've got front loading, which allows now these institutions to be able to predict what you're about to buy, and they get a little bit of a competitive edge, and they can actually drive the value of the stock up. You've got bots that are manipulating the stock. And if you're a small cap company that's wanting to go public, and now all of a sudden you're fighting against BlackRock and Hindenburg that are trying to short your stock, and they have the power and ability to be able to manipulate it in their favor, that's a pretty risky proposition. So what's happening now is people are looking at blockchain and saying not only is it less expensive, it's much more efficient, it's transparent because blockchain, everything is out in the open, every single transaction, every block is going to be on that ledger. It's booked instantly. And so for those reasons, we're seeing this movement now on chain. This is really great for the average retail investor as well because it gives them a seat at the table in capital raises of companies they would have never been exposed to. There are some challenges in crypto that do need to be addressed, especially when we talk about tokenization. It starts with regulatory uncertainty. The government has failed to provide a framework or clarity or any type of regulation from an investor protection standpoint. And my personal opinion is that was intentional. You think about the banks. The banks, decentralization, cryptocurrency poses a big threat to the banking system. You know, Anthony, if you were to go withdraw $5,000 out of the bank, go buy Bitcoin, who loses in that scenario? The banks do, right? Because the banks are taking your money, they're investing it, they're making a fortune on us at our expense. And I say that because while they're making money investing your money, the value of the dollar has gone down 25% over the last 5 years. It's down 10% this year. Worst performance of the dollar since 1983. So if you are not making at least 10% on your money, then you're actually losing money. So these banks watched as this more and more money started leaving the traditional banking system. You know, it might surprise you to now know that 20% of the US population owns cryptocurrency. That's trillions of dollars that have left the traditional banking system. In the last 6 years, more banks have closed than all of the previous years added up combined. So the bank's first response was to go out and try and create as much fear and uncertainty and doubt as possible. In the media, they told you that it was a bubble that was bigger than the dot-com bubble. They warned you not to buy it. They told you it was a decentralized Ponzi scheme. Warren Buffett called Bitcoin rat poison at one point. So the interesting thing is while they were telling you not to buy it, what do you think they were doing with your money? They were buying Bitcoin. They were building the rails and the infrastructure so that they could capitalize on it, but they weren't there yet. When that didn't work, by the way, and people kept buying crypto, their next phase was to refuse to send your money to exchanges. So if you tried to send money to, let's say, Coinbase or Kraken or crypto.com, but some of these banks would refuse to they flat out wouldn't send it. It was your money, but they wouldn't send it there. When that didn't work, they went to the government. And they said, look, we've got a serious issue here. The banking system that our country relies on is being threatened right now. And so the government, who loves control and wants to know where every single penny that you spend is, they realized that they didn't have their arms around it either. And they needed to slow down innovation. They didn't want to kill it completely. And so the approach that they used was they came out in 2020 saying that Bitcoin wasn't a security. They were going to leave that one alone, but they basically categorized everything else as a security. Well, if you're a security, you now have to register with the Security Exchange Commission. The problem was they didn't give a pathway forward to be able to do that. So now, if you were a quote unquote security based on their definition, utilizing the Howey test, which was a lawsuit that was focused on orange groves in the 40 to determine that digital currency that was established in 2016 was a security. If you tried to register with the SEC, they would decline it if they had crypto on it. So what it did is it forced all of these cryptocurrency companies into a bucket. And now it gave the SEC the ability to be able to just shoot fish in a barrel. And they could go after whoever they wanted to. They sued Binance, they sued Coinbase, they sued XRP, and hundreds of other companies. I was part of a company. They were one of the pioneers of tokenizing real world assets. I started off operating nodes for this particular company. I liked the idea of the industry starting to move from hype and speculation to tangibility and substance, where you could actually buy tokens that were backed by real world assets. And so I started operating nodes for this project. I was brought in as a consultant to build the community, develop the marketing arm for the company. And about a year in, the project was doing exceptionally well, and they got sued for selling an unregistered security without a securities license. Unfortunately, I also got sued. I wasn't an owner, but I got sued for the same reason because I was the one that was developing all the marketing materials. Now, when you get sued by the US government, by the way, it was a civil lawsuit. Once again, the claim was we were selling an unregistered security without a securities license. Now, keep in mind, for 10 years, these businesses, these meme coins, these altcoins, they operated without being constituted as a security. But this is when the war against crypto was declared by the U.S. government. And so we had two choices. The first choice was we could either go down the path of settling with the SEC. The second choice was to fight the SEC. Neither one of those were very appealing. But I'm a big believer that if you are passionate about something and you believe in something, you have to be willing to fight for it. And we really believed that the SEC was coming from a place of abuse of power. They weren't providing the clarity and framework that was needed. They wouldn't tell us how to operate compliantly. They just told you you were operating illegally. So we actually decided to fight the SEC, and we spent the better part of a year and a half and millions of dollars fighting the SEC. They come at you a couple of different ways, by the way. They come at you, first of all, financially and try to lock up your assets so you can't go get the legal defense that you need. The second thing they do is they come at you publicly and they attack you in the media, and they say all kinds of terrible things about you that aren't true. And then the third thing that they do is they try to drag it out in court. Not only did we win our case, but the SEC found them in contempt of court for the misrepresentations and lies that they made about the case. They didn't care about the facts. What they cared about is just killing the project. And so eventually the SEC attorneys that brought the case forward were fired from the SEC. They closed the regional office down that brought the case forward, and a federal judge fined the SEC millions of dollars for our case. This was a big turning point because a few months later, Gary Gensler, the head of the SEC, ended up getting grilled on Capitol Hill by all kinds of congressmen and women about their abuse of power. They wanted the ambiguity because they wanted to rule by enforcement. The best definition that I can give you is imagine if you're driving on the Autobahn with no speed limit, but then they can pull you over randomly for speeding whenever they want to. And that's essentially where we were at and where crypto was at as a whole, which drove a lot of innovation outside of the United States. Eventually, Gary Gensler stepped down. We had the new change of guard, new administration come in. David Sachs was appointed over the SEC. The first thing that David did was he invited those that were persecuted, prosecuted, and the innovators they pushed outside of the U.S. back to the drawing board. And he declared that the war against crypto is over. We were actually in Mar-a-Lago at the beginning of this year, and they made it very clear that they are committed to now making the United States the crypto capital of the world. You look at the last 12 months, we've seen some remarkable things happen. You've seen ETFs be approved and integrated into your mutual funds. You're seeing crypto being integrated into your 401ks. You've seen executive orders signed that now allow banks to be custodians over your cryptocurrency. These are the same banks. Jamie Dimon, head of JP Morgan Chase, 3 years ago doubled down, called crypto a decentralized Ponzi scheme. Anybody see what JP Morgan is doing today? Jamie Dimon's still at the helm. They just partnered with Coinbase and they're bringing everything on chain. So this has been in the works for a while. You can now qualify for a mortgage utilizing your crypto. You don't have to sell it, create a taxable event, put it in an account, make sure that it's sourced and seasoned. And that's just the beginning. So it's a remarkable time. We've never seen a time such as this. So my partners and I, we met through this experience, and ultimately we started to collaborate, and we didn't want to sit back and wait. We wanted to figure out a solution, a pathway forward. We wanted to be able to um, bridge that gap, so to speak, that was there. And what we ended up doing was developing a universally accepted framework for tokenization. We are now providing a pathway forward for businesses to tokenize, but we're doing it in a secure, regulated, and trusted environment. Keyword there is regulated. So the first decision we made is we're not interested in speculative meme coins, pump and dumps, ICOs. We're only working with real existing businesses with cash flowing assets, no speculative or unproven projects. That's where tokens are launched. They go try to raise money and then they talk about what they're going to do. And a lot of times that's where a lot of the fraud takes place. The way that we enforce this is we actually require every single real world asset that comes onto our blockchain to actually register as a security with the Security Exchange Commission. The SEC is now working with us. We actually force them to go file a proper registration. What this does is it forces things like independent audits up front, annually thereafter, and proper reporting on asset value, on ownership, and transaction history. I mean, if we wanted to take a company public, there is a checklist. There's a pathway forward to do that, and it was created for investor protection. It's crazy to think that in cryptocurrency, that does not exist up until now. People ask me all the time, so how are you guys different? What is it that you're doing that's different than some of the other blockchains that currently exist? There's Solana out there, there's Ethereum out there. There are companies already that are focusing on tokenizing. So I'm going to play a 70-second video for you that just really helps you to understand our meaningful purpose in the marketplace and what separates us from any other blockchain in the industry.
People often ask me, how is Trusted Smart Chain different than any other blockchain that's out there? You know, I was recently having a conversation with ChatGPT and I asked the question, how many blockchains are out there today? And it said over 1,000. And I said, okay, how many are true layer one blockchains? We're not talking about, you know, an extension of Litecoin or some type of a white labeled blockchain. And it came back and said 130. And then I asked, well, out of those 130, how many are fully operable? That means that their node network is active, their validators are online, they have the ability to be able to host a smart contract. And it said 30. And I thought, man, we are one of 30 layer one blockchains, which is pretty exciting. Then I asked the question, how many of those focus exclusively on real world assets? And it said 10. And then I asked the most important question, how many of those blockchains require every real world asset to file a registration A, register as an investment with the Security Exchange Commission, have independent audits up front, and annually thereafter? And it said 1, Trusted Smart Chain. You want to know how we're different? We're raising the bar in this industry.
So $16 trillion in real world assets was just given a green light to be able to tokenize. And what they're looking for is a regulatory compliant pathway forward and a blockchain that can provide the infrastructure. To our knowledge, we are literally the first in the world to implement and require these standards. And our node operators have a chance to be able to join Trusted Smart Chain and really build the future of tokenized assets. Now, let's talk a little bit about where we're at, our vision for the future. So this is not a capital raise. We're not building a blockchain. We already built our blockchain. We self-funded it. It is fully functional. We have 27,000 active nodes around the world. We have our validators are live. Our blockchain explorer is live. We have the ability to be able to host smart contracts. We have 12 real world assets that are already in process. The goal is to bring 10 to 12 on this first year, which coincides with the distribution of tokens that are being released. 20 to 30 in the second year, 100 by year 3, and then we will continue to go on from there. The average value of those real world assets that's coming onto the Trusted Smart Chain is 50 million. That's our sweet spot, small cap companies that want to raise capital. We also introduced one of the most esteemed blockchain communities in the world called Trusted Society. We have a lot of people that are new that are coming into cryptocurrency, and there is a learning curve there. And so we focus heavily on education within our community. We had the genesis of our blockchain on March 29th. That's when we brought the first 5,000 nodes online. That is significant because that's also when the token rewards started. Our node operators earn the native token of the blockchain, which is Trusted Smart Chain, every single day for their support and participation. So from this point, from the point forward where Scott activated his first nodes, and he now operates lots of nodes on our blockchain, he has received a deposit of TSC every single day since that time. We just had our token listing. So our token is now listed. It is trading. We have buy sells happening every single day. I haven't looked at the price this morning, but yesterday we were somewhere right at around $55 per token, which is a phenomenal response out of the gate. We kicked off a belief building initiative. This was really important to us because a lot of the blockchain cryptocurrency projects lack transparency. So what we do is we treat our node operators as stakeholders. We update them weekly on the status of what's happening with the real world assets, what's happening with the blockchain, what's happening with our grant recipient partners. We have events every 90 days. This year, we actually had about 10 events. Upcoming events include the January 16th and 17th, we have our kickoff event in Scottsdale, Arizona. At the end of January, we'll be going out and spending some time with Scott in Puerto Rico. So the idea is to bring our node community together and give them an opportunity to not only meet the founders, meet the developers, meet the grant recipient partners, to be able to meet the real world asset managers and listen to why they're tokenizing, why they chose Trusted Smart Chain. And what it does is it brings it all to life. You heard Scott say earlier that he's spent the last 9, 10 months getting to know the founders, to know the projects, to know the real world asset managers. And I've watched Scott go from a place of conservative skepticism to belief to now conviction, which is why we're all here. Our goal is to tokenize 100 real world assets in 3 years. We have a very clear pathway to be able to do that. We also introduced our own proprietary self-custody Prosper wallet. This allows our node operators to be able to safely and effectively manage their rewards, and they are the only ones that have access to the wallet. From a validation standpoint, our blockchain explorer is live. Bitcoin has bscscan.com. You could go there, and if you have the hash, you could look up any single transaction that has ever happened on the Bitcoin blockchain. You can see transactions happening in real time. Ethereum has Etherscan. We have the TSC Blockchain Explorer, so you can go and look at things like the current price. You can look up the nodes that are on the chain. You can see the blocks that have been created. You can see the transactions that have been created, or the transactions that are happening in real time, so that you can see that this is real, that it does exist. Now, one of the things that we did that was unique is we actually, as a company, ProsperLink, formed a grant. We take 25% of all of our node sales and we put it into this grant. We are selling 200,000 nodes. When they're gone, they're gone. When we sell out of our nodes, we will have put hundreds of millions of dollars into this grant. And the grant goes to support technology companies that are up and coming, that are focused on real world assets. We have 4 grant recipients currently. One of them happens to be T7X. T7X is a licensed digital asset platform. Another name for it would be an exchange, except here in the United States, they actually don't have an exchange license. We still call them that, but the technical term is licensed digital asset platform. Now, we've already donated millions of dollars to the T7X platform. Now, why would we do that? The reason is because they have chosen Trusted Smart Chain as their infrastructure. See, what they're doing is very unique. They are listing tokens just like any other exchange. Exchanges are where you go to buy and sell and trade crypto, just like crypto.com, Kraken, Coinbase, except they're only listing tokens that are actual registered investments. They have actually filed a proper registration, been approved by the SEC, which gives them the ability to do a capital raise. Now, here's where it gets interesting. Most of them are utilizing what's called Reg A, which allows them to solicit to both accredited and non-accredited investors. So now, once again, the average everyday person can participate in these capital raises. They can also now have a little bit more peace of mind of buying tokens that are digital representations of a high valued asset, rather than buying some speculative meme coin that has no intrinsic value. The third thing is these companies during their capital raise are paying on average a 10% distribution. So what this does is it caters to the smart money that's now coming into crypto that doesn't want to go play in the speculative gambling game on the meme coin side. Additionally, they also have chosen the Trusted Smart Chain token to facilitate this entire ecosystem. Similar to Binance, Binance is the largest exchange in the world. They're also a blockchain. They have thousands of coins that live on their blockchain. And if you want access to Binance or in their entire ecosystem, you have to go buy BNB, hold it in your wallet, because that's how you pay the transaction fees. That alone, that utility alone, has taken BNB to the 3rd largest market cap in the entire world, with a new all-time high about a month or so ago that hit about $1,250 a token. So the key is case use, real world case use and utility in Trusted Smart Chain is facilitating the entire T7X digital platform that is compliant in 7 continents around the world. So to give you an idea of how the flow works and where we fit into the equation, you have T7X, digital trading platform. They're listing real world assets that are registered securities. Tulum Coin, luxury hotels in Tulum. Scott and Steve have been down there. They've met the billionaire that owns them, that's tokenizing. Grow Estate, medical grade hemp facilities, really a real estate play across the United States and Canada. White Claw Crude, oil and gas company. These are just a few that are coming on chain right now. These real world assets are tokenized into digital representations that live on the trusted smart chain. So we are just the infrastructure. We don't get involved in the capital raise. We're not soliciting funds for these companies. They'll do that with a media partner. They'll go out and solicit their own funds. We just provide the infrastructure. A blockchain, what is a blockchain again? It's nothing more than a network of nodes. Think of nodes as blockchain's version of cell towers, as Steve mentioned earlier. They work together to validate transactions and maintain the network, creating a secure and resilient system. The beautiful thing is, in a decentralized system, you now can operate a node. You can go buy a node, no different than in the early days, they called them miners, right? Bitcoin blockchain, you would go buy a physical hardware miner, activate it, and you could start earning rewards for supporting the Bitcoin blockchain. Today, blockchains use nodes because they're much more efficient. And for operating that node, you get paid in the blockchain's native currency, which is Trusted Smart Chain, every day for the next 120 years for your participation and support of the blockchain. So the question then is, what can you do with these tokens and how are they used? Because again, case use, real world case use is the key. There's two ways to create demand. Think about this for a moment. Why is Bitcoin, it's down right now, but why did Bitcoin hit $125,000 per token in the last couple of months when it started off being worth less than a penny? It's a very simple mathematical equation. It comes down to utility, supply, and demand. Utility, supply, and demand. When Bitcoin first came out, it wasn't a utility token. As Steve mentioned, there wasn't a lot of case use. You really couldn't spend it, buy it anywhere. Today, people bought it in the early days just hoping to get lucky, hoping to catch the next pump. Today, people buy it because it's actual currency that's acknowledged by the US government, that has proven to have a better place of stored value than the US dollar and outperformed every asset class on the planet in the last 10 years. So people are buying it today for different reasons. They see stored value, they see an appreciating asset. So that is what we call utility. So if Bitcoin is worth, approximately $100,000 because of its utility or demand, let's talk about the utility for Trusted Smart Chain. So we require every real world asset that is coming over to being listed at the T7X digital trading platform using our blockchain to pay their investors their distributions, quarterly distributions in the Trusted Smart Chain token. So think about this for a moment. The average value of a real world asset is 50 million. They're paying out 10% distributions yearly for those that invest during their capital raise. That means they're paying out about 5 million a year in distributions. We require that real world asset manager to take their fiat currency, go to the trading platform, buy Trusted Smart Chain, and then pay their investors with TSC. So think about this for a moment. If we have 100 real world assets paying on average 5 million a year, that's 500 million a year in annual demand for the Trusted Smart Chain token. How much demand or required buying did Bitcoin have when they first launched? Zero. How much did they have in year 5? Zero. How much required buying of Bitcoin is there today? Zero. People buy it because they see utility. Our real world assets don't have a choice. Additionally, we require them to set aside 2.5 to 10% of their capital raise, which is consistent with what they would have to do if they go public. But instead, they have to take their fiat currency, they have to buy Trusted Smart Chain and stake it for 5 years. They're not allowed to touch it. So what is that doing to the circulating supply? It's reducing it. So now what happens, what you guys tell me, what happens when you have a growing demand and a diminishing supply? What happens in the housing market when you have 500 homes on the market, 10,000 people moving into your city because Apple's opening up a new plant? What happens to the value of those homes when they become more and more scarce? It's the same concept. We've already talked about how to participate in the T7X platform, getting access to all of these real world assets that are raising capital, offering a 10% distribution, you have to have trusted smart chain in your wallet, which also creates further utility. So what we're talking about here, guys, is demand. When you look at Bitcoin, if you study it, there's a couple of key variables here. It's the utility that ultimately has led it to an all-time high of 125,000, but it's also the tokenomics, the supply and demand. It was the schedule in which the Bitcoin was released. If you look at Bitcoin, the white papers when it was first introduced, they said there's only going to be 21 million Bitcoin. That's it. And that fixed supply created a unique store of value and an appreciating asset. Why? Because unlike the dollar that keeps printing and printing and printing and driving our value down, there's a fixed supply. Number two, they created a halving event. Every 4 years, they cut the amount of token that are distributed to the node operators and eventually when they sell, going into circulation, in half every 4 years. There's been a halving event every 4 years since Bitcoin launched. There's been four of them, and every time Bitcoin has hit a new all-time high. And then, of course, we looked at all of these different projects and said, why would we try to outmaster the master? Bitcoin is the most proven cryptocurrency project on the planet. So we did exactly what Bitcoin did. We created a total supply of 21 million that is programmed into a smart contract that can never be altered or deviated. And just like Bitcoin, in the first 4 years, 50% of the total supply gets distributed to the node operators. That's 10.5 million tokens that go out in the first 4 years. See, you could go buy a Bitcoin miner still today. If you want a decent one, you're going to spend about 9 or 10 grand. You could activate it, connect to the Bitcoin network, and you can start mining Bitcoin. The problem is that you can't go back to 2009 to 2013 when distribution was at its highest and they were distributing 7,191 tokens a day. Today, they're only distributing 400 tokens a day, and there's millions of people in the network that they're dividing that up amongst. So you're earning today about 0.00000005 Bitcoin per day at this point in time. Well, at Trusted Smart Chain, it is the same as Bitcoin was back in 2009. That is where our distribution is right now. So what does that mean? It means that every year for the first 4 years, 2.6 million tokens get distributed, which is 7,191 tokens a day. Now, I want you guys to think about this for a moment. Scott, let's say that we bring on 10 to 12 real world assets this year, which, as you know, we contractually already have them. And they're each paying on average, let's say 3 to 5 million in distributions in their first year. So let's go conservative and say 30 million. But we only distribute 2.6 million to the node operators. Now, most of the people that are here are not here to earn token and sell it the same day they earn it, or even in the first year. It'd be like selling Bitcoin in the first year. They understand the mission and the vision. Every real world asset increases the overall utility and demand for the token. But let's say 30% still decide to sell, which I think is a high number, but let's just say they do. That means 700,000 token go into circulation, but there's a $30 million demand. What has to happen, Scott, the value of that token to meet a $30 million demand? I think we all know exactly what has to happen. There's only one way for that demand to be met. What do you think, Scott?
I'm not Scott, but I'll tell you right now, it has to go up.
That's right. So that's what we're talking about now. Let's go out a few years, 100 real world assets, $500 million demand. 3 years in, we've only distributed, what's that, Steve? About 7.2 million token in circulation, we've distributed to the node operators. Let's say 50% have sold at that point. There's only about 3.5 million in circulation. You have a $500 million demand. Hopefully, you guys are starting to see how buying pressure, utility, supply, and demand has a tremendous impact. Now, what does it mean to become a node operator? People ask me all the time, do I have to be technologically savvy? What do I have to do every day? First of all, your node is validating transactions, maintaining network security, adding blocks to the blockchain. It is supporting the smart contracts of all of these different token projects that live on the Trusted Smart Chain. It's also storing and ensuring the integrity of the blockchain data. That's what your node is doing. You have two responsibilities. The first is you have to keep your node active. So how do you do that? You can host it. If you have a server, you know how to do that. You can do it on your own server, or you can do what most people do and use a data center that charges $1.95 a month, $24 a year. And as long as you pay your bill, your node is active, you will receive your daily digital rewards for the next 120 years. Now, the second responsibility is we call it participation. We have a node update call the first Monday of every month. At the very minimum, we ask you to plug into the node update call so you're aware of what's happening on the blockchain. In addition to that, we've got all kinds of calls, Zooms, and events that you can plug into, emails that go out on a daily basis to keep our node operators informed. Why is that important? Because votes come up occasionally, and we want you to be well informed because you are a stakeholder and you have an opportunity to be able to vote because that is what guides and direct the members guide and direct the trusted smart chain, governed again by a charter. When you buy a node, you get a membership in the Trusted Society, which is one of the most esteemed blockchain communities in the world. You're going to get access to all of our online communities. You're going to get access to these real world assets that are going to come to our events. And they're going to educate you about why they're tokenizing, why they're choosing Trusted Smart Chain. You're going to get access to one of the most esteemed blockchain communities in the entire world. We have thousands upon thousands of members. We hear over and over again that the community here within Trusted Smart Chain is by far the greatest asset that we have here. And I agree with them. The node is priced at $3,200 per node right now. I say right now because every 1,000 nodes that sell, the price goes up $100. We're about 60% through the current 1,000 block right now. So once we get through those 1,000, it'll go to 3,200. And that will continue all the way until we get to $10,000 per node. It's just simple supply and demand. The supply is shrinking every day. The demand continues to grow every day for what we're doing, especially now that our token is listed. We were just recognized in Washington, D.C. For Blockchain of the Year because of our impact in the community and in the blockchain community. We had all kinds of congressmen and senators that were there. Speaker of the House was there while we were receiving our award. So it's a pretty big deal. So right now, a node is $3,200, and that will give you your purchase and activation. It'll give you your daily digital rewards, and you become a stakeholder with voting rights. Within the Trusted Society, which is again our community, the name of our community for our node operators, we have statuses. So founder would be one node. A prestige level, very common entry point, 5 nodes, gives you 5 times the distribution. So currently today, right now, one node is distributing about 0.20 token per day. Over time, as more nodes come online, that will decrease. But 0.20 per day, if I have 5 nodes, I'm earning 1 full token every single day. Now, we also have additional levels, which go up to Legacy at 20 nodes, 20 times the distribution. We have Luminary at 50 nodes, which is 50 times the distribution. We have Titan at 100 nodes, which is 100 times the distribution. Both of these gentlemen here are Titans within our community. Titans are someone that believes in the mission and the vision. They want to accumulate as many tokens as they possibly can. They play a very important role in the support and the overall governance of the Trusted Smart Chain. And the last level we have is an icon. 1,000 nodes, it's the most that somebody can buy. The reason that we do that is because we want to maintain decentralization. The icons have to be voted in to serve on the TSC Blockchain Senate. It has to be unanimous because we want to make sure that somebody that's going to hold that much token is in alignment with our vision and our mission. They have a lot of influence. They'll get to participate in that government relations board of Trusted Society. For example, our icons. We were just invited to Mar-a-Lago this weekend. We were invited again in December. We probably won't be there this weekend. We may go in December. We were there earlier. We were in Washington last month. We are playing a role in the development of the regulation and the compliance as it's coming out. You probably saw the Genius Act was just passed, and now you're going to start seeing, which was more aimed at stable coins, and now you're going to start seeing the next layers. And we are leading the way and helping to develop this compliant regulatory pathway for tokenization. In closing, I'll say this. I look at the gold rush and I think about it and I think, smart money really invests in the roads before the rush. The people that really made the money in the gold rush were the people that built the railways, the people that sold the shovels. And in that same way, right now, the US government just gave $16 trillion of real world assets the ability to be able to tokenize. And so that's the rush. And it's only going to get bigger and bigger. The road, well, that's Trusted Smart Chain. We are the first blockchain that is providing a regulatory pathway forward for the tokenization of real world assets. What makes up that road is our node operators. The node operators earn Trusted Smart Chain for their participation and support. That is the same token that is in greater demand with every real world asset that comes on our chain because they have to utilize that trusted smart chain token to facilitate their entire ecosystem. So, Scott, I'm going to kick it back to you. I want to say thank you for the opportunity to be able to come and share the vision. I know it's a lot of information. We do have if you want to keep doing a deep dive, we have a reference guide that we can send you as the next step that'll give you a lot of great resources to take a look at.